turn our attention now to the IT space. It's been doing exceedingly well over the last couple of days as US, 10-year bond yields have eased, pushing up Nasdaq on Wall Street and even the Indian IT index. Sandip Agarwal, fund manager at Sowilo Investment Managers, is with us now. Sandip, before we get talking about the listed universe here, wanted your views on Tata Tech. Everyone's excited about this 3,000 crore IPO. It's a pure offer for sale, but the first one from the Tata Group. Your thoughts on Tata Tech, and would you advise subscribing to it? And if yes, why?
So see, we have seen track record of Tata Group in technology, and they have really, given very good returns because the corporate governance, the quality of management, and the stability, all those factors have always been very good. While it is very difficult for me to comment whether you should subscribe or not because I have a PMS which I run, so I cannot comment specifically on the stock. But what I would like to say is that this group has generated huge returns for the investors in past. And in technology companies, you need 2-3 things only. Your leadership should be good. There should be stability. And because these are cash generating businesses, so, over a period of time, even if they look expensive in near term, sometimes they generate huge wealth in the long term because see, there is no debt and all those things which can become a bigger problem in future. So I think, technology coming in from Tata Group itself should be good.
I just had 2 follow-up questions to this, Sandip, and good morning. Good to see you after a while. So, one complaint is that 40% of their business comes from their group companies, right? Tata Motors and Jaguar Land Rover. So, the question is, why have they not diversified to other neutral clients? Why do other clients not want to, sort of take on Tata Tech? That's one question. And the other question is, do you think that post-listing, the valuations of Tata Tech can match up to, say, something like a KPIT Technologies? I mean, there's still a big gap. So on these 2 points, what's your view?
So, it is a very valid question and valid concern. But if you see in the past, we have seen when any such company comes where this is a B2B business. And when you start the business, you need to have anchor client. And obviously, we have seen this in Tata Elxsi. If you recall, 4 or 5 years back, Tata Elxsi has corrected 60-70% when they have gone through tough time in one of their large clients, which was group company. And then when, the cycle turned and same client started, giving more revenue, the stock went up to almost 10x from in just a period of 18 months. So I would not say that, this is a very bad thing. Obviously, every company wants to diversify its client base. And because of concentration, sometimes it happens that, you see a big dip for 3-4 quarters in revenue. And that is a risk which an investor has to take. But these are businesses which are B2B and very specific businesses. So there are only 15-20 large clients in the world, out of which 1 or 2 large clients are group companies and something. This will happen in the initial 4 or 5 years of the company. Post listing also you will see big concentration, but slowly it will go down because every management knows that this is a risk and they would like to diversify. And with such brands as your customer, you also get an opportunity to, get more clients and source more clients. Same thing has happened in other companies which has been in this space. You go and see the data, how their concentration has consistently fallen. And because there is high concentration, you are getting the stock at a particular valuation. And as the concentration risk reduces, the multiple also shoots up. So that is, I think, part on the high concentration. And I forgot the second question, sorry.
So I think you answered both the questions at once. So the second question was on valuation, right? When will they be able to narrow the gap with KPIT Technologies? I guess what you're saying is that once they diversify, then perhaps the valuation gap will get narrowed. Is that correct?
Yes. Yeah.
Okay. All right. So that's on Tata Technologies. Let's move on. In the entire IT space, how are you feeling now? Because there is this overarching view that the bond yields have now cooled off. There is not so much a fear of recession anymore in the US. At least it won't be as bad as what was feared earlier. Are you bullish on this space now?
See, I have been eternally bullish on the space, and there are times when I have not been right because there is time correction which has happened. There has been some underperformance. But I like the sector from 2-3 perspective. One, globally, the talent shortage is becoming more and more prominent every year. And the per capita spend on technology in every country in the world is going up. So naturally, this is a structural business and it will continue to grow. There will be years when it will grow at 20%. There will be years when it will grow at 7-8%. So we have to buy, when the growth falls to 7-8% and there is gloom and doom. And then we have to wait for the right growth to make return. That is the way it has to be looked. But this is, I think, as you rightly mentioned, with bond yields going down so sharply and I think that now, people will start talking about again expanding the tech budgets and all that. So you may see actual numbers not that great for 2-3 quarters, but the sentiments will improve substantially. The deal pipeline will go up substantially. So I think we have broadly seen, the pain behind. In my view, we will not see much pain going ahead unless in some stocks where, multiples are still very high and there could be some 1 or 2 quarter blips and all that. But in the large names, I think, there is a lot of comfort at these valuations.
Yesterday there was this note by Ambit Capital, and they were saying that the ask rates or the consensus expectations for FY25 are still very high, and it might be difficult for Indian IT companies to achieve the expected consensus expectation. Can you talk about the consensus expectations in the market, at least for the large cap IT companies, and do you think it will be possible for these companies to achieve, or we'll continue to see downgrades?
I agree that, there could be 1-2% miss on the estimate, but you have to remember that in 1 or 2 quarter time, everyone will move to FY26. And the way we have seen deals signed in last quarter, if you see last quarter deal data was quite good. And I think now because the yields have started falling, you will see that next year, next few quarters, the deal data will be very strong, which will finally show up in numbers in FY26. So while I agree that FY25, there could be a 1 or 2% cut, but I don't think that will lead to big negative reaction on the stocks. People will start looking at FY26, and FY26 will look good because the deal pipeline is becoming stronger.
All right. So what are your top picks now in the sector? I mean, since you've said that you've been eternally bullish, and ever since I've known you, actually, you've been bullish on the sector. But for someone perhaps who's trying to make a re-entry or maybe just sort of top up their positions, what would your advice be?
So, in large caps, I think that you should look for value. There is a lot of value in some of the names like Tech Mahindra, HCL Tech, to some extent Infosys and all. So you should be a value buyer right now because, see, the risk of recession is not completely gone. So when you are buying value names, the comfort is much higher. And once you see that, the risk of recession is completely gone or people have started talking of expansion of budget, then you can go for high growth stocks, which are a little expensive. So that is the way I would put. Obviously, the names which I mentioned, my clients and our PMS will have some of the position in that. So that is a disclaimer. But broadly, I think, you should look for value because in such environment where things are looking good, but 2-3 quarters actual number could be painful, you should be always defending yourself in the value large cap names.
Okay, one more quick question on Tata Tech IPO before I let you go. Any concern that this is just a pure OFS and there's no fresh issue?
I think, that should not be much of a concern because it is an opportunity, I would say. I would just say that. So I don't see much concern there.
It's also that these companies are cash rich. Yeah. So they're generating cash every quarter. So there is no need for the company per se to do a fresh issue and get money into the company.
Absolutely.
So that's another point there. But by the way, Asia, Sandip, thank you very much for joining in.